All right, welcome back to the Wealth Advisory's Top 10. We're almost done with April while we film. By the time you're watching this, we'll definitely be done with April and we'll be on to May. So it's time for the top 10 stocks for May 2022. We'll do a little recap of last month's performance, but first, let me start off by recapping the market's performance. S&P 500 lost 8%, the NASDAQ lost 12%, the Dow Jones beat the pants off of all of them by only losing 4%, and we didn't do too well. We had a couple of winners, but most of our stocks went down. Our average was not as bad as the NASDAQ. It was about as bad as the S&P, and it wasn't as good as the Dow Jones. So, my goal is to beat the markets, and I definitely did not succeed last month, but I'm undaunted, and I'm back for another month, and I think I have some really good picks for you that are going to outperform the market. I can't promise we're going to get a lot of gains this month because I think we've got some more weakness ahead, but at least we'll be able to protect our capital a little bit better. So anyway, let's go ahead and get into it. I'm going to start off by keeping our winners from last month. We didn't have a lot of winners, but we did have a couple. And we're going to keep those because successful traders close out the losing positions and let the winners run. Bunge Limited gave us a little gain last month, and I'm hoping that momentum holds. Food scarcity is it's growing. Shortages are becoming a real thing, and Bunge, being a major player in the agricultural commodities industry, has pricing power and should benefit. So we're going to go with Bunge for number one. Number two, here's another case of a winner getting to stick around. Prologis did not give us a whole lot of gain last month, but it didn't lose money like the indexes did either. So we're keeping this one around for May. It's a solid and growing operation. It's expanding both organically and through acquisition. It's just made a bid to buy a whole bunch of properties from Blackstone in Europe. Plus, it's got that steady and growing dividend payment that we really love. So we're going to go with Prologis for number two. For number three, we've got another stock that gained in April as the rest of the markets dropped. It's Rexford Industrial. It's a real estate investment trust with properties all over the Southern California infill market. Basically, if it comes into the U.S. through one of those ports in Southern California, chances are it's paying to stay at a Rexford warehouse for at least a bit. The supply chain is still snarled, and that's playing right into Rexford's hands. And all those increased profits mean bigger distributions for us. So we're going with Rexford for number three. Let's see, that brings us obviously to number four, and we're going with another REIT. That's Real Estate Investment Trust. And we're going to go with Park Hotels. Now, Park outperformed the markets last month. Let's see, people are preparing for the return of travel. Folks may not be out there filling up the hotels just yet, but they're going to be soon, and markets like to invest before things happen rather than after. There's already a lot of vacations planned for this summer. Park recently reinstated its dividend, and I expect that to start growing again soon. The company's done a ton of work to get its balance sheet stronger and get its cash flows positive, and it's really paying off, and I think it's going to pay off for us in the long run as investors. So we're going with Park Hotels for number four. The top five is really heavy with real estate this month, and you may have already guessed why. It's because real estate is a hard asset, and REITs own hard assets, and hard assets increase in value in inflationary environments. I've been talking about inflation for, well over a year now, getting close to 2, and it's really hitting, it's raging. I don't see it slowing down, and I really like the real estate because, that's a hard asset. That is going to increase in value with inflation. It may not beat it, but it'll at least keep pace with it. So that all being said, that's why I think these REITs are bound to outperform the companies that don't own actual stuff as that stuff gets more expensive and dollars are worth less. So number five, we're going with another REIT, Americold. It's the biggest cold storage company in the country, and it's growing by consolidating the fractured industry under one roof. It pays regular and growing dividends, and its assets should increase in value as inflation keeps on raging. So it's going to round out the top five. Okay, 5 down, 5 to go. So starting off the second top five, which is what we're going to call 6 through 10 today, we've got one of our newer recommendations. This is the Guggenheim Opportunities Fund. Now, this investment is all about generating steady income to pay bills or reinvest in down markets. And it's really good at paying out. I'm talking about, making its distributions to investors every single month since its inception back in 2007. So we probably won't see much share price movement on this, and I really never expect to see much share price movement with it because it's all about the income. So we definitely will notice when those dividend payments hit our accounts. Now coming in at number 7 is a company that's not a REIT. Hooray, right? I'm kidding, of course. We love REITs at the Wealth Advisory, but we also love this company, and it's Leidos Holdings. So I like to say it's one of the biggest government contractors that you've never heard of. It's constantly inking multi-billion-dollar deals with the government to provide technical support, but it's not one of those big names like Boeing and Lockheed Martin and Raytheon. It is in the top 10 of government contractors by contract size, by amount of money the government pays them. So that's why I like to say it's the biggest government contractor you've probably never heard of. But anyway, as cybersecurity spending keeps ramping up, I think Leidos should be a really big beneficiary. They're already helping the government, providing technical support, providing analysts, providing people to help run, the information systems that the government relies on. And also, Leidos bucked the trend in April, and while it did drop some, it fared a lot better than the broader markets. So we're putting it in at number 7. Let's see, we've got 3 more to go, and we're going back to real estate for the next 2, at least. We're adding Stag Industrial. So this is another REIT. It's coming onto the list at number 8. And Stag, it owns and leases single-tenant properties to companies like Amazon, XPO Logistics, even the U.S. government, just to name a few. But basically, it leases these big buildings to tenants that want to own the whole building. It's not looking to lease out a little space to this guy and a little space to this guy, and that's why its customers are huge companies like Amazon and XPO and the U.S. government. They don't want to share. They want it all to themselves. So this company, Stag, it pays monthly distributions that we can use to pad our accounts with a little extra cash. And it also outperformed the markets in April, so we're going to see if that trend continues in May. We're down to the final 2. And as I've said, we've got at least one more real estate investment trust to add to the fold. So we're going to do it with number 9, and that's going to be Slate Grocery REIT. Slate owns and leases grocery stores to operators across the U.S. metro markets. It owns about $1.3 billion worth of critical real estate infrastructure, and it pays a regular dividend that grows with the company's revenues. And in an inflationary environment where people might have to decide what to buy and what to skip this month, a grocery store isn't going to lose too many customers. So I think that Slate is a good investment for a time like this, and we're putting it in as our number 9 pick. And all right, we're here. We made it. We're at pick number 10 for May's top stocks list. And I'm telling you, I saved the best for last. I'm going back to an old tradition here from years past, and I'm going to add our newest recommendation to the top. I write a monthly investment newsletter called The Wealth Advisory. Don't worry, this isn't an ad. It's to explain why you're not hearing me speak right now. It's because over 25,000 members pay the very reasonable annual subscription fee for The Wealth Advisory so they can get my latest insights and advice hot off the digital press. I believe I have an obligation to my loyal readers, so there will be a quiet period during which the latest investment recommendation will not be made public. Should you decide you want to join the Wealth Advisory ranks and get immediate access to these picks, you'll find a link in the video description to a secure order page where you can sign up to become a member. Of course, I invite you to tune into the Wealth Advisory Top 10 videos for as long as you like with no obligation whatsoever, except maybe to hit the like button once in a while. So just to go back and do a little recap for you, in the top spot, number 1, we've got Bunge Limited. Number 2, Prologis. Number 3, Rexford Industrial. Number 4, Park Hotels. Number 5, Americold. Number 6, the Guggenheim Opportunities Fund. Number 7, Leidos Holdings. Number 8, Stag Industrial. Number 9, Slate Grocery REIT. And rounding out the top 10 for the month, CF Industries at number 10. So thanks again for watching. If you're on YouTube, don't forget to subscribe to the channel, like the video, make some comments, and hit that bell to make sure that you get notified when I post new content. And as always, thanks for watching. I'll see you next month.